Very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. You know that Treasury Consulting loves research, and I'm really thankful to someone in the sky who make me a person who loves research. Until the last day of my life, I would continue to do research. I know this habit creates irritation for few people, but we are here to increase this irritation. Because after this video, there is a video coming which creates sleepless nights for many people. Rest assured. Today I'm going to be speaking on Axis Bank, but before I speak, I would like to have few indemnifications. Number one, the data covering to this is coming from a newspaper dated 29th October. Rest data taken from Thomson Reuters. On an often basis, Treasury Consulting come in public domain, like when the Yes Bank scandal happened, we came in public domain and said that the next bank is indecent. After this, we came in public domain about disclosures in HDFC Bank. After that, we got threatening call from HDFC Bank, and rest you understand. But that project is not it's shelved. Rather, this project is taking a big shape now. And one of the person retires from HDFC rather than anyways. When it comes to US banks, one of the important things which we are having is the way they disclose the information. I have said number of times that I am going to be giving 9 out of 10 to them. Now why not 10 out of 10? Because scope of improvement is always there. If I talk about HSBC, I understand there are a lot of negative news about HSBC and their share price is also not doing very well, but trust me, the way they disclose their annual report, I'm forced to give 10 out of 10. But I am giving 9 out of 10 and I know that I'm doing injustice to HSBC because I'm giving 9 out of 10. They deserve 10 out of 10. And when I look at the Goldman Sachs and JP Morgan Chase annual report, I am forced to give 20 out of 10. 10 from my side. I always believe that JP Morgan, Goldman Sachs, Citi, UBS, Credit Suisse, HSBC, Standard Chartered, these banks annual reports should be made mandatory for MBA institutions. I of personal opinion that these banks annual reports should be regularly be put in the libraries of different institutions so that students can reach to that report, although I understand they are available on their websites. But this is the importance of an annual report. I'm always a strong reader of the annual report of Goldman and JP and HSBC, and mind me, I have made diaries and I have noted very minute things in about the annual reports because I believe that they are books. One of the two important parameters on which US banks are judged is FICC revenue. By the way, FICC stands at Fixed Income Currencies and Commodity, and ROTE, Return on Tangible Equity. I am not saying that other parameters are irrespective or they are good for nothing or they are worthless. No, these are the apparent two factors on which they are judged. Like in this quarter, Goldman did phenomenal. They score a century in 30 balls. They just declared phenomenal trading revenue. And I'm always of opinion that the bank always end up two kind of revenue. One is definitely the trading revenue and one is the non-trading revenue. Well, the non-trading revenue composition includes interest denominated revenue and operating income revenue. Example. Trading revenue means when there is a trading desk in every bank, like Goldman, JP, Citi, HSBC, you name. And this trading desk take buy sell position, and they creates money for the bank. And they not only creates money, they rather create a huge dividend for the bank. And I think that is one of the reasons why after 2008, few banks never looked back. Never looked back. And they just grew. While after 2008, there are many banks who are just history. That's it. The non-trading revenue comprised of interest income. Now, what is interest income is really, I can say basically, which is SLR income in Indian context. When banks deploy the customer money in the SLR, they are forced to, and on which they get some income which they parked as a dividend. And rest is the operations income, which is issuance of checkbook, credit card fees, debit card fees, late payment charges, loan charges, and all these kind of stuff. But who is right? American banks or Indian banks? I'm sure the answer is Indian banks, because in our MBA institutions, FICC is not taught. And I'm sure 90% of the people, just give me 1 minute, there is a good chart I have seen on the Bloomberg. Let me save this chart for my future. Yes. And I'm sure many young guys even do not know the meaning of FICC. Now I have some data. First, I talk about provisions, then I talk about operating profit, which is also known as EBIT. In quarter 120, the provisions of Axis is around 4,000 crores, quarter 2 4,000, quarter 3 4,000, quarter 4 is around 7,500 crores. Oops. Quarter 121 back to normal, 4,500 crores, and quarter 221 is around 4,500 crores. So which means that provisions are, operating profit, which is also known as EBIT. I'm very surprised that quarter 120, quarter 220, quarter 320, quarter 420, and quarter 520, in 5 quarters, the operating profit of Axis Bank is around 6,000 crores. That is really a surprising element for me, that how can that possible that in the 5 consecutive quarters, the operating profit remains more or less in a range bound. But maybe. In quarter 221, Axis Bank reported roughly closer to 7,000 crores of operating profit. While the loan growth in quarter 120 was around 19%, and by the time quarter 221 reached, it is around 14%, 1/4. Which means from 19% to 14%, which is there is a decline in the loan growth. Okay. Am I getting FICC revenue anywhere? Forget. Now to get this, I went to Reuters and I look at the consolidated positions matrices annually. Let me take past 5. 2020, the net interest margin is 3.5%, 19 3.43, 18 3.44, 17 3.67, 16 3.90, 15 3.9, 14 3.81, which means that net interest margin is more or less intact, we can say. Okay, plus minus 20 pips is okay, it happens. So nothing to worry about, to be honest. Let's talk very important thing, and that is more important for me to understand, is the non-interest income divided by operating income. And that is 25% in 20, 27% in 19, 28% in 18, 27% in 17, 27% in 16, and even if I go back, this is closer to 30 to 32%. It means that non-interest income is 32, between 30 to 32%, which means interest income, which that is the point I always wanted to convey, which means that the interest income component to the tune of operating income is around, you can say, 70%, while non-interest income is around 30%. Am I clear? So let me write. Axis interest income is around 70% of operating income, non-interest is around 30% of operating income. This is what the data is showing. Let me change Axis Bank to ICICI Bank. In case of ICICI Bank, the situation is little different, and you would be surprised to know that non-interest income to operating income is more than 100%. 1.03, 1.27, 1.26, 1.08. Non-interest income to the tune of operating income is more than 100%. Let's check my loving friend, loving bank, HDFC Bank. Here it is 0.25, 0.22, 0.23, 0.21, 0.21, 0.22. It means that interest income is around little bit higher than Axis Bank. Am I clear? Okay. Let's talk Kotak Mahindra Bank. Here also little change. Here it is 0.62, 0.63, 0.63. It means the non-interest component is more than what interest component. But the net interest margin is very closer to 4.3 to 4.5%. Am I getting what are you getting what I wanted to convey? When we look at bank, when we get the bank results in the media, like today, Hindi media just focusing only on the three numbers: PAT, operating income, and gross non-performing asset. Three obsolete parameters to judge a bank. I can give you so many factors. I don't have time. I can give you so many factors which help you to judge a bank. Example, guys, do you know that in banks there is a thing called, leverage, times leverage? Do you know that? Do we even know how times leverage is computed in a bank? Do we even know what is the formula of that? So guys, one important thing that the young guns need to understand how to read bank balance sheet. Like, let me go back to the Axis Bank and let us test another thing. The deposit growth ratio of the last 5 years is 16.6, 21, 9.8, 15.5, and 11.2. This is deposit growth ratio of Axis Bank. ICICI Bank is around 17.5, 16, 14, it means more or less intact. HDFC 24, 17, 22, 17, 21 as of now highest. Kotak Mahindra 15, 17, 22, 14. It means Kotak, ICICI and Axis are more or less equal. HDFC in some separately. Guys, do you know what I wanted to convey here? Let me tell you. There is a correlation between net interest margin, deposit growth, loan growth, and non-interest income to operating income. And this correlation creates a bifurcated statistics which is known as earning quality analysis. It is shortly known as EQA. And earning quality analytics is a highly statistical and mathematical job. Rather, I am wrong here. It is not statistical and mathematical, rather it's a brainy job. An earning quality analysis of Goldman, JP, Standard Chartered and all, this is way beyond. Example, let's now check Goldman Sachs. The parameters, the way Goldman Sachs is described in Reuters, Indian banks not described. Why? Why there is a change in Indian banks versus the US based banks? Tell me one reason why there is a change. Why? Now let me tell you one example of Goldman. Profit to value risk analysis. Do we know that there is a thing called profit to value risk analysis? Do we know that there is a thing called matrices? Do we know that there is a thing called FICC? We do not know. And this is what the purpose of this video. If you really wanted to be successful in the life, then one thing which you need to understand is how to read bank balance sheet, and that is very important. It is not about success. If you wanted to be a financial analyst, if you wanted to be a investment banker, if you wanted to be a structurer, if you wanted to be a derivative specialist, or if you wanted to be anyone, you need to understand how to read a bank balance sheet. And you should have competence to challenge the bank balance sheet. That doesn't mean that if the balance sheet is being audited by EY, KPMG, Deloitte, and PwC, and you know that how great these companies did in the past. Recent example is the Wirecard in Germany, which is also termed as Enron of Germany. So you have the credibility to challenge these people. Because every passing day, the bank disclosure are getting pathetic, and the young generation which is coming up from the MBA colleges, this young generation even do not know how to, I would say, read bank balance sheet. They only know current asset and liquid asset. That's it. And that too, upar se. That's the most important problem. So guys, if you get some time, then just download the annual report of the Goldman, JP Morgan and HSBC. I assure you, if you've not been able to understand anything out of this annual report, say after 20 minutes of study, then it effectively means that your knowledge about banking is zero. That's more important. Today I proved my point with the help of Reuters, which is interest component, non-interest component to the operating income component. I don't have time. That's more important thing, because It's around 4 or between 4 to 4:30 a.m. Singapore. Else I would have given you a lot of other information also. But the most important thing is that, and that really hurts me, that the young guns which is coming out of the system, they are really clueless of where they are heading, even as far as the banks are concerned. And then people ask me what I do to be an investment banker. And I close this video with a question. If non-interest income to operating income is greater than 1, what does that signify for a bank? That's more important. And do you know, I'll tell you something. Let me talk about Axis Bank. In Reuters and in Bloomberg, we have, which is called estimates. Yes, top analyst. We can see the estimates of top analyst in Reuters and Bloomberg, both, but both are having different way of showing. Like, let me check of Axis Bank. If you talk about Axis Bank, the analyst covering Motilal Oswal, CLSA, ICICI Securities, HDFC Securities and Research, IIFL, Morgan Stanley, Edelweiss Capital, Elara Securities, Spark Capital, JP Morgan, JM Financial, Dolat Capital, Ambit Capital, ICICI Direct, Credit Suisse, Deva Securities, Bustine, Citi, and many. And don't ask me about their ratings. But hardly you see any analyst will raise the point what I raise. But this world would continue to live the way it is, and Treasury Consulting will continue to pinpoint the right thing in the market. And the right thing is that the way American banks report their annual reports, it should be the format across the globe. There are something which is definitely a scope of improvement for American banks, but apparently speaking, they are well above any other bank of the globe. And more importantly, what should make mandatory in the bank disclosure is EQA, earning quality analysis. And MBA institutions should teach their students how to compute earning quality analysis of a bank. And I'm sure as we speak, most of the people might have heard earning quality analysis EQA first time. So good morning. This is Rahul from Treasury Consulting. You know our WhatsApp 9818485155. Before I close, let me remind you one thing, that Treasury Consulting started the journey of Basel 4. When Basel 3 was introduced, I was not in a situation to comment because I was working. But I assure one thing to you, as and when Basel 4 will come, Treasury Consulting is not a price taker, rather it is a price maker. And if there is a requirement to challenge anyone, we do. All big fours, be careful, especially in India. Because in Basel 4, we will speak what it is right. So careful. And Treasury Consulting will read Basel 4 in another 1 year, because I know that Basel 4 will definitely not come before 23. Corona is not going at least 2 years from now. So in next 1 year, I can prepare for Basel 4. And today, hardly anyone is focusing on Basel 4, except me. In Basel 4, I will link each bank balance sheet, JP Morgan, Goldman and all, not from comment purpose, but from their reading purpose. And our comments would be difficult for big fours to digest. Big Fours need to understand one thing very clearly, that there is one company in the globe who can challenge them upfrontly, and especially their partners, those who have habit of traveling in the business class. Because one thing that I am regularly watching is that the level of knowledge in the banking sector is at the lowest level as of now. Orthodox knowledge is like, did you ever saw any person who came on, who is invited by Hindi media, who raised the point that non-operating income is greater than one? Did he raise the point about immunization? No, but we do. And you're forgetting, now we have audiobooks also. This is Rahul from Treasury Consulting. You know our WhatsApp 9818 485 155. Have a great time, sir.